So Amazon dropped their Q2 earnings report for 2025 and the numbers are massive. Revenue was $167.7 billion, net income $18.2 billion, and AWS, their cloud arm, continues to be the profit machine. But let's just slow it down and break it all the way through. What Amazon does, what these numbers actually mean, and why it matters for investors like me. Amazon is way more than just online shopping sites. Think of it as three giant businesses under one roof. One, their retail and marketplace. This is the Amazon that most people know. That is where they sell products directly and through third-party sellers plus Prime memberships. The second one, which is very, very amazing, is their Amazon Web Services, their cloud computing arm that powers apps, websites, AI, and businesses around the world. AWS is one of their most profitable engines. Number three is advertising and subscriptions. So ads across Amazon, Amazon Prime Video ads, and subscription services like Prime. These are also high margin revenue streams for them. So when you're looking at Amazon numbers, you have to see them as more than retail. It's really a tech and cloud company with multiple engines. So here are some highlights that you need to know. Their net sales, which is the revenue, was $167.7 billion, up 13% year over year. This is all the money Amazon made from retail, AWS, ads, subscriptions, etc. Right? So revenue growth shows demand is strong across all their businesses. Then their operating income was $19.2 billion against the $14.7 billion they did last year. So this is profit from running the businesses before interest and taxes. Think of it as core profit, right? It's up big, which shows that Amazon is managing costs well. And then we also have their net income, which is $18.2 billion. This is the bottom line, like the profit after everything. So for investors, this is what matters the most. So Amazon is not just huge, it is highly profitable. And then we have their AWS cloud, which came in at $30.9 billion in sales, up 17.5%. AWS makes up 18% of sales, but contributes more than half of their total profit. Margins here were 32.9%, down slightly from their Q1, something investors need to keep eye on. And then we have their advertising services, which was $15.7 billion, up 23% year over year. So ads on Amazon search, product pages, and Prime videos are booming. So this is a high margin segment, meaning it makes Amazon a lot of money. And then their international retail was around $36.8 billion sales, up 16%. So international business is also profitable now as against before. So this is a big improvement for Amazon globally. So why should investors like me care? One, Amazon is growing and they're profitable. And secondly, the business mix is improving. So high margin segments like AWS, their advertising and subscriptions are growing faster than retail. So that means that Amazon is less reliant from e-commerce. Even though AWS grew like 17.5%, which is slower than their rivals like Azure, is still the backbone of Amazon's profit. So investors should watch out margins here very closely. And then their retail turnaround. Both US and international retail arms are making money again, proving that cost cuts and efficiency efforts are working. So I'm going to have like a longer and detailed version on my YouTube page and also what they will be expecting for Q3 and more. So if you want to watch that video, you can follow me on YouTube for longer versions of my videos. Do with